Hey guys, Mike here. So quick short video on earnings, the recap and everything of what happened to Meta, Qualcomm and all the rest of them. And so let's start off with, I think Meta or Facebook will be the most important one right now, as you'll see. And of course, I think it's what everybody expected, guys.
Meta missing on the top and bottom lines, reporting revenue of $28.82 billion versus the $28.94 billion that analysts estimated. Earnings also missing, coming in at $2.46 versus the $2.59 that analysts had estimated. Also looking at daily active users, the daily active users were a slight beat, 1.97 billion. DAUs just a hair ahead of the 1.96 billion estimated. MAUs are a miss, 2.93 billion, a hair lighter than expectations. Revenue guidance coming in lighter than expectations. The company is saying third quarter revenue will be between 26 and 28.5 billion. The analyst consensus we have for third quarter revenue is 30.5 billion. So that guidance is coming in light, and we see Meta currently trading down nearly 6%. Scott?
And the thing you were looking forward to most of all, I think it's fair to say, Julie, is the revenue numbers. They were expected to post the first ever decline. Did they in fact do that?
Yes, so the revenue did decline. So it was really the revenue growth rate is declining. So that's the question. And revenue did come in lighter than estimates. So this is the first time in Meta's history that the revenue has declined. So that's something to watch there. But also to me, the fact that the guidance is light, that's likely the factor that's most weighing on the stock right now.
And of course, that only leads to a 5% drop because remember, the bar is really, really, really low. I just know they're spending a lot of cash on something over there. So I don't know what it is. So next is Qualcomm.
Revenue came in at $10.9 billion with adjusted EPS, earnings per share of $2.96, but it's Q4 guidance. The range for earnings per share is $3 to $3.23, so the midpoint is lower than what the street anticipated, the extended lockdowns in China playing a role. You also have adjusted revenue. Q4 revenue is also at the lower end, between 11 and 11.8 billion. And although Qualcomm is diversifying, handsets are still a pretty big part of the business, and revenues are on track to grow below the 50% year-on-year guidance. However, automotive is growing, a theme, you know this, Scott, we're seeing across many chip makers. Qualcomm CEO saying they hit, quote, record QCT. So just think about like chips for auto cars and IoT revenues in a challenging macroeconomic environment. Qualcomm is also expanding its patent license agreement with Samsung to a multi-year agreement. So that's good news for them, pertinent to not only Samsung phones, but all Galaxy devices. You can see, though, shares are down over 2% on that weaker Q4 guidance.
And you can see it's only down about 3%. It just gave up his gains for today. We'll see how this affects the semiconductors tomorrow, which were way up today, by the way. And by the way, if you get anything out of this, please hit that like and subscribe button for me. I really appreciate it. Think about sharing the video. As always, guys, thank you for all your support.
Hilton earnings are out with a rising outlook on spiking travel demand. You're seeing Hilton shares pop here in the early going, up close to 5%. And I would say, finally, that is a justified move in response to earnings. We've been talking about all morning long how a lot of these earnings reports are seeing pops. Maybe they don't deserve it. Hilton deserves it. RevPAR, revenue per available room, a key industry metric for the hotel industry, up 54.3% year over year. You saw occupancy gains strongly across all of Hilton's brands. You had them also come out here and say, voice confidence in continuing to buy back stock. We saw the similar type of move here by Alphabet, but by and large, good quarter from Hilton, likely one coming in a few days from Marriott as well.
And he is so right. This is so justified, up about 8%, and they actually deserve to be up because they killed their quarter. I think they raised guidance. And guys, like I said, we are still spending like crazy right now. And that leads us into the dumpster fire that is Teladoc. Sorry if you own this stock, but it is down again 24% after hours. And the truth is, all you got to know, hey, revenue grew 18% year over year, but boy, net loss per share of $19.22, a goodwill impairment charge of $3 billion. There's no point even going into the rest of it because, you know, it's just a hot mess over there right now. And that leads us into Etsy. Etsy's actually up. This is a real surprise. Thank God I did not buy puts on this one. Up almost 8.5%, and they surprised the market, right? I mean, hey, it beat both top and bottom line. The stock was up 15% at one point in time. It really skyrocketed, right? Active sellers and buyers, a slight miss there, but the street doesn't really care. And so sellers at 7.4 million, up 41% year over year. And their active buyers were up as well. And a couple side notes, Sherwin-Williams, the paint company, they got killed by around 9% today. They're down. Missed earnings. And of course, that has to do, I'm sure, with the housing market and stuff. And of course, tomorrow is another big day. So quick video for you. Got them out to you. See what's down. We'll see how the market. We'll see how tomorrow goes because we got GDP first thing in the morning. So I think it's going to set the tone for everything else. After that, you got Amazon and Apple, baby, up after hours, and so they're reporting earnings. So that'll be big as well. So have a good night, guys.